I think that Bitcoin is the only asset that is trying to do this inflation hedge, this kind of chaos uncertainty hedge that the Bitcoin we're talking about. These other assets basically have taken the idea of Bitcoin, right? Kind of a blockchain, the decentralization, et cetera.
Right.
And they basically have created other blockchains to try to do different things. And I always say it's the difference between comparing the US dollar, a barrel of oil, and Amazon stock, right? They're all assets, but they all exist in some sort of electronic form in the traditional financial system. But you don't confuse dollars and barrels of oil. They have fundamentally different use cases.
One of Pompliano's core arguments is simple but powerful. Bitcoin's value depends on who you are. In developed countries like the United States, most people don't worry about government seizure of assets or being denied access to their bank accounts. For them, Bitcoin tends to fall into three main categories. First, speculation. Many investors see Bitcoin as a high upside asset, something that could significantly increase in value over time, similar to early-stage tech stocks. Second, inflation protection. With concerns about money printing and rising costs, Bitcoin is viewed as a hedge, an asset with a fixed supply that cannot be diluted like fiat currencies. Third, sovereignty. Some are drawn to Bitcoin because it exists outside traditional financial systems. It offers control true ownership of wealth without reliance on banks or governments. But outside the US, the story changes dramatically. In many parts of the world, Bitcoin is not a luxury or a speculative bet. It's a necessity. People living in unstable economies, war zones, or under authoritarian regimes use Bitcoin as a survival tool. When you can't carry gold across borders or trust your local currency, a decentralized digital asset becomes incredibly valuable.
I think it depends on who you are. You know, one of the things about a product that ends up being valuable in the world is it needs to be valuable to different people for different reasons. So in the United States, most people are not worried about not being able to go to an ATM and pull out cash. They're not worried about the government censoring their transactions. They're not worried about, those types of very authoritarian type actions against their money. There's a lot of countries in the world where people are very worried about that, right? In the United States, I think that most people are looking at Bitcoin for one of three reasons. They're speculating. They believe it's going to go up in value, and so that is very attractive to them, no different than any other financial asset. Two is they're very worried about inflation. They believe that Bitcoin is one of many solutions that could potentially insulate them. Or three is they like the fact that it's outside the government. They like the fact that it's outside of the financial system, and they feel like if there is some sort of doomsday scenario, they're able to hold this asset, they're able to control it, have self-sovereignty, and they feel like that has value that may not just be economic, but also could be from a resilience standpoint. Those are U.S.-centric viewpoints, problems, etc. You can go around the world, though, and I've gone and spoken to thousands of people around the world about this. Many people, they don't care what the economic speculation potential is. What they really care about is, hey, I live in a country that is engaged in a war, and I want to leave. I can't bring my house. I can't bring my gold. I can't bring these assets. I need to get it out of the country. How do I do that? Bitcoin becomes very interesting. You mentioned Iran. And one of the things I think is very interesting that happened recently is on the same day, Iran asked to be paid the toll in the Strait of Hormuz in Bitcoin, which basically means that there's a bunch of countries that don't trust each other. And so they're saying, hey, I want to get paid in an asset that is not dependent on the monetary policy of any other country. Okay, so it's this neutral, decentralized kind of non-sovereign asset. Those people in Iran who are asking to get paid in Bitcoin, I think there's a lot of people in the Western world that say, that's not really maybe the best spokesperson for Bitcoin, right? We don't want to be saying, hey, the Iranians like Bitcoin, so, this is a great invention.
Right.
On the same day, though, Morgan Stanley launched their Bitcoin ETF. And so if you look at those two as kind of polar opposites, you have what many people would consider United States adversaries, funders of terrorists, et cetera, who are saying, hey, Bitcoin is valuable to us. And then you have one of the oldest investment banks on Wall Street trying to package it up and sell it to their clients as well. That's what we talk about when Bitcoin is different things to different people. One is a speculative use case, and one is, frankly, a use case out of necessity in a geopolitical situation where countries don't trust each other. The counterfactual is that the currency of choice for drug dealers, criminals, smugglers, terrorists around the world is the US dollar. And what we have found in the data is that the number of bad actors that are using Bitcoin is very small The reason why Bitcoin continues to appreciate is not because of that adoption by those bad actors, but instead the monetary policy is designed in a way where it continues to become more and more valuable over time because it's a fixed supply asset. And so when you start to view it from that perspective, now you get into a scarcity conversation. You get into what is the market price of an asset if lots of capital wants to move into it? And that begs the question, well, why would they want to do that? And this is where the non-sovereign kind of neutral asset becomes really important. I think that Bitcoin is the only asset that is trying to do this inflation hedge, this kind of chaos uncertainty hedge that Bitcoin we're talking about. These other assets basically have taken the idea of Bitcoin, right? Kind of a blockchain, the decentralization, et cetera.
Right.
And they basically have created other blockchains to try to do different things. And I always say it's the difference between comparing the US dollar, a barrel of oil, and Amazon stock, right? They're all assets, but they all exist in some sort of electronic form in the traditional financial system, but you don't confuse dollars and barrels of oil. They have fundamentally different use cases. Bitcoin's entire purpose is to be electronic currency, right? To be a digital store of value that you can use to either protect your economic value or you can use to purchase things from other people. So think of it no different than the US dollar. It's just a digital version of that. Ethereum wanted to do a bunch of things where they wanted to take that idea and then make it so that it was programmable. We want to go and we want to build things on top of it. But Bitcoin isn't built for that, right? It was very difficult to do that. And so there's this gentleman, Vitalik Buterin, who said, hey, I'm going to actually take this idea and I'm going to change it. I'm going to make, evolutions to it. And I'm going to go create another blockchain. And this one's going to be able to do this kind of computational work that Bitcoin can't do. Usually when something gets created, the first mover does not stay the first mover, right? If you think of search engines or social networks or this stuff, it's usually somebody who's able to learn from some of the first attempts and then go and build this. Bitcoin has been able to stay as the number one because it has a network effect, but also because it is going after this problem of how do I buy something in the digital world that will protect my economic value? Well, I think that there's a couple of different iterations as you evaluate Bitcoin, right? There's the technical components. There's definitely the network effect. And then there is a psychological, or you can think of this as like a global brand, right? So if you look at going back about 40 years or so before Bitcoin was created, there were multiple attempts to create a digital currency. There's a group called the cypherpunks, and they were very into how do we create some digital currency that we can use that's outside the system, kind of what Bitcoin eventually became. And attempt after attempt after attempt, what they realized was there was technical impurities or technical issues with those attempts. Bitcoin was the first one that finally, I think people generally agreed, okay, it has solved all of the technical challenges to this point. Now, just because you are technically superior does not mean you're actually going to get adoption. I think of Bitcoin's maybe most important aspect is it was created and put into the world at a time when no one cared about crypto. Those early years of Bitcoin were incredibly important because you had organic growth of people who really bought into what is Bitcoin. They weren't being paid to be there. In many cases, they were actually losing money because they were, spending computational power or they're wasting their time or whatever. But as this idea of Bitcoin started to grow and adoption grew, you had this kind of very big groundswell. When technology products get enough of a network effect, they are very, very hard to break. And I think that Bitcoin, because it is money and the ability for me to send it to you, you send it to me to hold it, the mining, all this stuff creates this network effect that I never foresee a world where there will be another asset that can overtake Bitcoin in this use case. And so it's pretty much the world's got one shot. If Bitcoin is successful, amazing. If it is not successful, I do not think that we will get a digital currency that is outside the system. And I think that's why I'm so focused on, hey, I would love for this to be successful. Because Bitcoin's alive and the other assets are dead. Stability is the single biggest lie in financial markets. And even if you don't like Bitcoin, want to learn about Bitcoin, I do think that there's an entire generation, I call it the volatility generation. They understand that you need volatility in your portfolio in order to protect yourself. And so I'll give you a couple of examples. If you go talk to a financial advisor in the United States of America and you ask them, I want to have a very safe portfolio, they will take your money and they will pretty much put it in cash and treasuries. Those are the only two assets in financial markets that are designed to lose money. So by definition, they are not safe. And so now what you're starting to see is, well, forget for a second individuals. Let's go and look at maybe pension funds in America. Most pension funds in America are underfunded. They do not have the money to pay. Social Security does not have the money to pay. And so why is that? Well, they all pursued what we were told was a safe, stable approach. And they put the money in treasuries. They put the money in bonds or fixed income and in these different instruments. And now what we're learning decades later is actually that was a horrible decision. We did not keep up with the pace of inflation. We do not have the money to pay these promises. What do we do? And so the reason why I say that Bitcoin is alive or volatile assets are alive and the other ones are dead is because if you as an investor go and put majority of your money in those assets and you wait, you are going to end up like 50% of the country, which is you fall further and further behind and you end up on the wrong side of this K-shaped economy. Instead, if you look at what are the assets that are volatile? Well, we know Bitcoin is. We know that certain technology stocks are, right? And you just go through this list of all these volatile assets. They are the best performing assets in an investor's portfolio over long periods of time at this point.
Stablecoins function as checking accounts. Bitcoin serves as a savings account. Crypto and equities act as investment vehicles. Bitcoin, in this model, is not meant for short-term trading. It's designed for long-term holdings, something you accumulate gradually and ideally never sell. He compares it to gold in Indian culture or real estate in America, assets passed down through generations. For younger generations priced out of housing markets, Bitcoin may become the primary way to build and preserve wealth over time.
The entire financial system is engineered around assets that have 100% downside, zero upside. Dollars have no upside, all downside. Bonds have no upside, all downside.
Right.
So those are 100% risk assets. These other assets, yes, of course, there is if Tesla doesn't work or something like that. But you're getting paid for that risk that you're taking because Tesla can appreciate. Now, Bitcoin is very unique in that the reason why people think Bitcoin is volatile is not because Bitcoin itself is volatile. One Bitcoin equals one Bitcoin. Always has, always will. It's actually the exchange rates where people start to look at the volatility. But Bitcoin is the same Bitcoin that it's always been. And if you were to go back and look over 3, 5, 10 years, anyone who was given the choice of put your money in dollars, put your money in real estate, put your money in Bitcoin, you were much better off buying assets of real estate, Bitcoin, gold, etc., than you were putting it in dollars or treasuries. Before we get to the stock market enthusiasm and inflation, I would say that I always get very nervous whenever the market assigns a consensus view that is very black and white. If we go back to 2020, a lot of people forget we had COVID, everyone gets locked in their home, and the government basically steps in. And it was very scary, I think, for a lot of investors, right? The market had sold off significantly. Bitcoin went down 50% in a day. Right? There was all these kind of problems. And when the government stepped in and they basically brought these monetary bazookas and said, hey, we're going to print trillions of dollars, the Bitcoin community was probably the single loudest group on the internet that said, you cannot print trillions of dollars without getting high inflation.
Right.
Now, there was two people in the world who kicked off what I call the Bitcoin bull run in the finance world. That was Paul Tudor Jones and Stanley Druckenmiller, because they came out in 2020. They went on national television. They said, I'm buying an inflation hedge basket. I think the words that Paul Tudor Jones said is, and I like Bitcoin because I think it's going to be the fastest horse. And of course, that spread like wildfire online because the Bitcoiners were like, oh, we went and we got real people. They like our asset now, right? But what it did is it removed the career risk for people all across Wall Street because, hey, I probably can't get fired if I'm doing what Paul Tudor Jones and Stanley Druckenmiller, et cetera, are doing. But Bitcoin went from $10,000 in August of 2020 to $60,000 in March of 2021. Inflation did not move.
Right.
Inflation was at 2%. We only got to, I think it was 5% inflation in June of 2021. So people say, well, why did that happen? The key thing that most people don't realize about financial markets is they are forward-looking. People do not wait for high inflation to come and then, let me go buy an inflation hedge asset. They say, I think inflation is coming, and they go and buy the asset in preparation of that. And so Bitcoin moving was actually an alarm system telling us high inflation is coming. And it ended up being right. Inflation ended up going over 9% according to the government numbers, probably much higher. And so Bitcoin continued with that. Stocks went up, real estate went up, everything kind of carried with that inflation. But Bitcoin was the first asset to say, hey, this is going up. Now, the reason why that becomes really interesting is if you fast forward to 2025 last year, Bitcoin was the asset that peaked at a new all-time high and then began to aggressively sell off. And I think a lot of people say, why is Bitcoin going down? Gold is going up, stocks are going up. Why is Bitcoin going down? Well, now we can look at the data and realize that we started to get these massive deflationary forces swallowing the US economy. tariffs, deportations, AI, robotics, etc. And so once again, Bitcoin was the first to sell off as kind of an alarm system. And so when you start to see this, what you realize is Bitcoin's price is probably the most pure truth teller in financial markets. And it is the most sensitive to changing economic conditions. And so when Bitcoin runs a lot, you should immediately ask yourself, why is it running? What is coming that the market is telling me? When it sells off a lot, same question. What is it telling me as to why this is happening? I believe that Bitcoin is a digital savings account. That's probably the best way to think about how this fits into an ordinary American's life. If you think in your traditional financial environment, you have a checking account for day-to-day expenses, you have a savings account for medium to long-term kind of capital that you keep, and then you have a brokerage account and you go and you buy stocks and try to, outperform the market and drive a higher return. In the digital world, we have now recreated a checking account, a savings account, and a brokerage account. The checking account are stablecoins. They're just US dollars that is now represented in a digital form. So no different than Bitcoin is a digital version of, a gold. Now stablecoins, you can use a dollar. Most people who use stablecoins, they just see that they're using dollars. They don't even know there's a difference on the back end, right? Well, savings, I don't think most people look at their savings account as they're worried they're not using the savings account for a 1 week, 3 week, 6 month, time period, right? Most people are looking at their savings as it's money they hope they never have to touch over a long period of time, right? And so if you have, let's say you're a student and you think that you're going to make a big purchase in 3 months, you should not take dollars and put it in Bitcoin, right? Obviously, it can go up a lot, it could go down a lot, it could go sideways, et cetera. I don't think anyone is advocating for that. Actually, what you hear most Bitcoiners say is you should dollar cost average into Bitcoin, and then you should hope to never touch that for the rest of your life. It is a true savings account. And the example I always use is if you go to the country of India, the culture there is the family basically acquires gold, whether it is in jewelry form or physical, bars, et cetera. And then they basically pass that gold down generation after generation after generation. And you're kind of like, the black sheep of the family if you sell the family gold, right? Like if you're like the third or fourth generation, you sell the family gold, your great-grandfather rolls over in his grave type thing. If you look at America, look at the great families that have been building wealth over the last 50, 60 years. They did it with real estate, right? Somebody at some point started to buy real estate and they passed it down generation to generation to generation. I now believe that Bitcoin is, for the next generation, that new thing. And so I always talk about, home affordability in America is horrendous. If you are a young person and you want to store value over your lifetime, the generation before you or 2 generations before you, they bought a home. Well, you actually do not have enough money for the down payment. You cannot afford the mortgage payments, and you literally cannot afford the home. Bitcoin provides this savings account because ultimately, if you are able to dollar cost average into it and leave it there over a very long period of time, it is one of the best performing assets in the world, if not the best performing asset. Because look, most of the other stuff, it's no different than the stock market, right? They all have kind of different bells and whistles. They all have different promises. They're serving different customers. They have a different monetization strategy, and they're all trying to differentiate each other. And they're basically trying to sell, whether it's the public, coin holders or the market on, hey, here's our differentiated product, and this is why we're going to accrue value over time. The beauty of Bitcoin is that it doesn't change. Right? If you kind of broaden out,
not that it doesn't change. The value of it changes. The system underlying it doesn't change.
One core component of my worldview is that we are entering something I call the age of automation. And Bitcoin is a prime example of this. Bitcoin is the very first currency in the world where we have automated the central bank. So if you think of the Federal Reserve, right, you, me, and millions of people around the world hold our breath when Jerome Powell steps up to the podium. Are they going to cut rates or are they not? Right. What's the cost of capital going to be for the next 30 days? Bitcoin in 2009 laid out this is the monetary policy for the next 100 plus years. And it has done exactly what it said it was going to do every single day. The reason why that becomes really interesting is because now we have an automated central bank that is immune to increases in demand. If gold price goes up, we start trying to dig more gold up because it's more valuable. If Bitcoin's demand goes up, nothing changes in the system.
Finally, Pompliano frames Bitcoin within a broader technological shift. The age of automation, Bitcoin represents the first fully automated monetary system. Unlike central banks, which adjust policies based on human decisions, Bitcoin follows a predetermined set of rules established at its creation. Its monetary policy is transparent and unchanging, extending decades into the future. This eliminates uncertainty around supply, something no traditional currency can offer. Even gold, often seen as scarce, responds to demand. When prices rise, more mining occurs. Bitcoin doesn't behave that way. Its supply remains fixed regardless of demand.